Welcome to Second Take, the show that focuses on the issues behind the news. Mining Weekly editor Martin Creamer joins me today to unpack the latest in the mining industry. Welcome, Martin.
Hi, Sashni.
Can you tell us about the Northern Cape's lucrative copper potential that must be given assistance?
You know, the Northern Cape, I think, is going to be an important frontier for us. People have known for a long time that it's well endowed, but we haven't really explored it in the way we should. And we also need immediate copper, particularly, to come out of there. The world wants copper. The world is electrifying. Copper helps you to electrify. So you can see the price at, $10,000 a ton. And there are opportunities there in the shorter term as well. And I think that must be encouraged. South Africa Incorporated must encourage copper to come out of the Northern Cape as soon as possible. We know that there are various activities there which are quite encouraging, but there have been a few hiccups, particularly from the community, not understanding how important this is. I think they should be persuaded that this is very important for all of us in South Africa. At the same time, you see some people have walked around there and seen stockpiles, probably for a century, but have never imagined that there's value in them. All of a sudden, people are seeing huge value in them. So that is the sort of surprise that you can get when you walk around an area in the Northern Cape. So hopefully, they'll get a lot of support from the whole of South Africa, including the government.
And with the Junior Indaba set to take place next week, there is concern over the lack of JSE listings.
The Johannesburg Stock Exchange listings have been declining, and it seems that since the introduction of the MPRDA, which was the new legislation in the democratic South Africa, we have just seen a constant decline of companies on that stock exchange. And we have 400 mining companies owned by about 100 groups, but that's not reflected on the stock exchange. At the moment you've got less than 40 companies in mining listed, and the junior companies number about a dozen or so. So that needs to really be looked at. Why is this situation continuing? Even though we have a lot of rhetoric about the need for exploration and junior mine encouragement, we see that Canada's got 1,000 companies, mining companies on the exchange. Australia, 600, and we can hardly sustain a dozen. So I think it's the whole approach to investing, the need for small investors to back small companies, and perhaps we can come up with a formula. We know that the Canadians have with the flow-through scheme. We find the Treasury very slow on bringing through this flow-through scheme. They did say they would bring it in, and in fact in one budget they said next year we'll have this, and then they introduced a scheme which is not good at all, and it hasn't encouraged mining. So we have to understand, why is the Treasury so opposed to this flow-through scheme, and see whether we can't do something to modify it, to make sure that ordinary people can invest in these companies, as the whole history of our stock exchanges, actually that's what happened in history. There's no reason why it shouldn't happen again. But I think they do need to look at the trillions of savings that are controlled by fairly large finance houses who have the ear of Treasury. And they're obviously wanting to protect our provident funds, protect our pension funds, which is very good. But there could be a win-win for everybody if they look at it carefully and study it, see what's been done in Canada particularly, and if there is any modification or improvement to be done, let's do it. But coming up, to the Junior Indaba next week, again, this issue is coming through, that there are just too few listed companies. We can't get the juniors going if this is the case, and where they do go forward, it's concerning, because we've now got like 20 manganese companies with not one directly listed on the JSE. Now that has all sorts of implications. It has environmental implications, it has social implications, It has governance implications. We've seen some serious governance breaches, and those have been reflected over the time, and nobody seems to be able to deal with it. But if you list it and you've got to report regularly, your shareholders deal with that. And it is something that we've got to get those manganese companies on the stock exchange, because it's just not the way it should be done. And we can see that if you've got too much freedom in this area, it's not good. And environmentally, with the environmental, social and governance part of it, they should definitely encourage these people to come on the stock exchange, even if we have to have some sort of venture capital situation reformed on the exchange. We do have a venture capital equivalent, but we need to really link everything up here to get this exploration going, because it's needed for the South African economy.
And lastly, Martin, can you unpack for us South Africa's potential for battery mineral exploration?
Battery minerals are on the lips of the world at the moment. They need to store energy, and they need batteries to store that energy. And we often think of the electric vehicle, but it goes much bigger than that. You've got to store a lot of electricity. Towns and cities are going to have to store a lot of electricity. And we need to see how many battery minerals we've actually got here. Now, Bill McKechnie, who's very experienced in exploration and, created great wealth through his involvement in diamond exploration with Venetia and other big exploration successes, he senses that we have got battery minerals in our ground. And he points out that already, although we get very little foreign investment into exploration, not even a percentage of the total world investment in exploration, he's saying that money is coming into South Africa this year to explore for lithium. So you can see that there's an appetite for this. The foreign investors want to get in, and they obviously sense there's certain areas where they're going to have success with lithium, and they're prepared to put in their $4 million as it is, I think, at the moment, which when you multiply in rands is not too bad. So it's only South Africans who are not trying to get their own metals and minerals, even with our very difficult regulatory situation here, full of red tape. You still see foreign investors wanting to come in. So there's a sense that we're losing out, that we should be discovering a lot more of these battery materials, battery minerals and metals, which are going to be in such demand. It's good that we've got vanadium, and we've good that a lot of our platinum group metals are there for hydrogen side of it, but there are aspects of this energy storage that require these particular critical metals and minerals, and people feel we've got them here, but we're not going to get them because of the tight regime. But even through that, some people are still prepared to take the risk, and they're foreign companies.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. And don't forget to listen to the audio version of our Mining Weekly daily email newsletter.